On that note, let's move our attention to the markets in Kenya. You're looking at the NSE 20, which closed down today, 4,960 points, shedding around 0.4%. And of course, off the back of a 1.8% gain last week. And in fact, the overall NASI, which is the overall market index, closing up by 3.5%, making that the best performing market in Africa on the week. So a bit of a soft performance for the day. Looking at how the currency is faring against the US dollar, 83.85, and you're looking at ever so slight dollar strength this hour. Well, let's move to Nairobi. We've got our market watcher on that end, Ted Macharia, investment analyst at AIB Capital, standing by to give us his perspective on what's driving the markets today. Ted, thanks as always for joining us. So a quick glance back to last week, we see the market was up 3.5%, the overall NASI that is, and of course the NSE 20 also posting a gain of 1.8%. But what are your expectations as we go into a new week, given of course the softness we've seen for the first trading day?
Thank you for having me. As you've said, we have seen the market perform very well last week. A lot of that was attributed to speculative activity on Kenyan and strong activity from foreign investors, particularly on East Africa breweries. We expect the trend to continue through the week, although we have seen thin tradable volumes in today's activity. A lot of that might be attributed to some selling pressure from some of the gains made at the end of last week. But generally, we expect some small momentum to pick up and positioning and perhaps investors prepping themselves after Q1 performance from the banking sector.
So just glancing back at East African breweries, because it continues to be a stock that's being pushed by foreigners. So when it comes to the earnings contributors of East African breweries right now, you've got the mainstay Kenyan market, but you've also got them, of course, very much present in the broader East African region. Are foreigners buying into the earnings that could be generated inside of Kenya, or is it more the broad diversification that they like right now?
I think most investors are looking at real growth, top line organic growth coming from outside Kenya. The first half results were showing a small 14% dip in profit on account of increased financing costs. Now obviously these financing costs were to step up their battle locally in the brewing industry. They have expansion plans in their plants, and they had taken out a loan from their parent company, and that ate into their half-one profits. But the growth outside Kenya was pretty strong. We were seeing in the range of 30 to 35% growth in some brands in Tanzania and Uganda, and foreign investors might be picking up on that. But basically, I would say that the uptick is attributed to the bottoming out of the counter, somewhere at around 300 when there was management change at the top, and the not poor, but mediocre half-one performance.
Let's move on to Kenyan Cobalt, because the stock was certainly one of the top gainers, as you said, last week, and was up around 10%. Now there's speculation, as we heard on Friday, that there could be a new possible investor after the talks with Puma Energy broke down. I mean, any substance to this? Do you think that Kenyan Cobalt will be able to get everything that Puma didn't like right about the company, or wrong, didn't like about the company? Do you think they'll be able to get those issues right now, and of course be seen as a possible takeover target once again?
I think a lot of the momentum lies in the fact that Access Kenya was experiencing a lot of speculative activity before finally a proper acquisition coming through. Perhaps that is what most investors are looking at. Fundamentally, Kenyan has made some improvements. They had hit a loss last year on forex hedges that they had made, and they have worked very hard in Q1 to reduce their expenses, to control them to just below 30%. And that would be perhaps an encouraging factor, a factor that will see investors come onto the counter at prices below 12 shillings. Obviously, we saw it go up and come down on profit taking this week. So on the operational basis, we expect at least some improvements, but the speculation is bound to drive the counter up.
And of course, that's what we're seeing right now. Buy on the rumor, perhaps sell on the news. But let's get to the earnings that we saw coming through from National Bank, because we know that they're looking to now raise capital to grow market share, given the fact that they have been quite prudent when it comes to lending. But we've got the numbers out today. Pre-tax profit only rising 3.3%. I mean, just give us your views on the earnings and the numbers that we saw coming through today and the prospects for them really being able to boost earnings on the top line.
I think National Bank of Kenya still has a long way to go in improving their internal performance. It's a 3.3% growth overall, but when you look at the quarter-on-quarter story, it's a small shrink in profit, perhaps attributed to the economic cycle and the slowdown in quarter one because of the political risk that we had. Generally, the bank is not doing as well as its peers. If you look at the cost-to-income ratio, is standing at 70% compared to a sector average of about 50%. And they have to do a lot to match the rebranding efforts they are making with the profits that they'll be producing. That might not, however, dampen investors' expectations as per the rights. They have said that they are looking to raise 10 billion from the market in a rights issue, and perhaps investors will be picking up on that. But from an operational perspective, and when you compare it to its other peers, the bank is an underperformer and might not feature very prominently on most books.
So who's your favorite bank in the sector right now, Ted?
Well, I like different banks for different reasons.
If you had to pick one, you have to pick one.
Stanchart.
Yeah.
Then it'd be KCB.